Welcome to TQ Talks, where taxes meet planning. Here's your host, Craig White.
Welcome to another episode of TQ Talks. I am your host, Craig White. Happy to have you in. Today we are jumping into why the best tax planning starts after you file. Now, if you've been following this sequence of events, we've been trying to go over, of course, all the changes in one big, beautiful bill, and our company focuses on tax planning. Pretty self-explanatory. We're telling you exactly what we do. And we just came off of cash flow, if I'm not mistaken, probably 2 episodes ago. And then we had Ravel come in from Empire Tax talking about his experience in the tax realm and the tax world as an entrepreneur, which was great. Love to have him on again. Fantastic show. And now we're getting into tax seasons ending or beginning, depending on how you look at things. So in this episode, again, we're talking about why the best time to start planning for your taxes is right after you file. Most people think about, I know, tax season once a year. I know that's how it works. And even if you don't really want to think about it, you're sort of like, oh, God, here we go. We're drudging again to do our taxes. But they assume that April 15th, we're talking about personal, let's say, or, it could be March 15th or whatever your sequence is, depending on how you're structured. That is the deadline, right? That's how it's been echoed through all your lives. You're learning about it. You go, hey, it's the end of tax season. We say it as well. April 15th, oh my God, the end, it's the last. And it is to file, but it is definitely not the finish line. It is really the starting point. If you're trying to structure things correctly and get yourself in a position of success when it comes to not paying or paying as little as much as possible in taxes, then filing your taxes is really just a look back, right? And if you wait until next year to think about your taxes, which most people do, unfortunately, you're already losing. At the end of the day, most businesses, right, or I should say, honestly, every good business is either solving a problem, right, or they are addressing a pain point. So if you think about it, right, that's what all businesses are doing. They're finding a gap, especially good businesses or new businesses. They're saying, hey, here's a problem that we can solve. And us as consumers are excited about it. Like, oh my God, yeah, I can't get the last bit of toothpaste out of this doggone thing. And this company makes this roller that makes it easy for me, right? Our tires go flat. We were seeing someone do that the other day, and the person had a portable pump, and it was a brilliant idea. Wow, I can throw this in my trunk and I'm never in a bad situation. The pain point for our industry is taxes. Everyone hates paying taxes. We know that. We totally understand that. But everything we're talking about in all of these podcasts, in our posts on social media, when we're talking to our clients, it's a strategy. Every decision is about helping you to legally reduce the amount that you pay back or reduce it or get rid of it as much as possible. The goal is zero, right? It's always going to be zero. But ultimately, you're always making a decision that affects your taxes. You may not realize it, but you always do. The question is really, are you helping yourself or hurting yourself with the decisions that you make? Now, this is where we start to help you to understand what's really happening. And what's happening is you're filing your taxes. Your tax return is a look back period. It's when you see exactly what's happened already. It's pretty self-explanatory. You're seeing the tax return. There's nothing for you to change because it's already filed, but it's giving you a ton of info based on how things already went and how they may go moving forward. So your tax return is probably the most honest snapshot of your business. And people sort of take that for granted. They go in, they run in to speak to their preparer, CPA, EA, whatever, and they throw the information in. Maybe they give a profit and loss. Maybe they don't. Maybe they don't even know what it is. And they say, hey, here's who it is, and blah, 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 blah. Figure it out. And when it comes to a lot of CPAs, they punch some numbers, they follow some rules, and they give you the spit out. Done. Yeah, that's not exactly helpful. The other part of that is there's no review. There's no discussion as to what's going on and what things can possibly help you or hurt you, and why, asking those questions. Well, why did you do this, or why did you change that, or what happened here? It's pretty much number crunching, which is not exactly something you want to do all the time. So you want to pay more attention to what's going on in your tax return. How much was really paid out, right? If you have a big tax bill, why is that bill there? What are the deductions that you saw? What counted in your mind, but then what actually counted on the tax return? Food is one I can immediately think of, because everybody thinks, oh, I'm just going to write out food. They have zero understanding of how that deduction works. So they put every single meal they've gotten from Chick-fil-A to pizza to Wawa or whatever the case is. It's like, no, we're going to explain it to you. And we're also going to have to explain that it's 50%. That's even if you have that discussion with your EA or your CPA or accountant, whatever the case is. If you never know, then all you know is that you gave a number and keep it moving. That's it. So the tax return tells a story, right? And most people never read the tax return. That's the truth. And I'm guilty of it, because obviously before this space, you file your taxes, you move on. You get a refund, God, you're happy, yay, clap hands, and that's the end of it, right? Until January, February comes around again, and you're sighing and saying, here we go again, and you find all your paperwork, shove it in, and pray for the best. So whenever you do this and file without moving on, or with moving on, like just saying, hey, that's the end of this story, you're missing the most important part of the story, the movie, the climax. This is the climax, to be quite honest with you. Because this is not the ending. This is the beginning, but it's also telling you. It's like one of those movies that's open with crazy gunfire or something wild happening. You're like, yo, this is how it starts? Yeah, this is how it starts. Your tax return is telling you, it's giving you a ton of information. It's your job to then pick it apart to figure out what the rest of the movie looks like. When you are building your business or trying to put your business in the best position possible, and we're talking about reducing taxes, the tax return helps you to look at several things, and we'll break it down for you. One of the things is you might have a really successful tax season, and what I mean by that is you turn everything in, and you owe little to nothing, and you're so excited. Then you close the book. End of story. Movie's done. What you missed was you didn't understand how you got there. There was no plot, right? You didn't see how things built up for you to get to that position. You don't know if there were big purchases being made that year that will not be made the next year. Was there a sale of an asset? Did your income increase or decrease? Decreasing happens all the time. That puts you in a better position when you filed your taxes, meaning you owe less, but you lost a lot of money because you didn't make it. Are you noticing that there was an increase or decrease in subcontractors, employees, or commissions? Right? Was there an unusual maintenance or repair that you did? I'm thinking of my truck drivers that run all these errands right up and down the highway, who sometimes come in with these gigantic amounts of 1099s, which is fantastic, but then the repair bill is horrible for that year, right? They might have a triumphant tax return because they owe less, but obviously their wallets are feeling the pain. Did you use the wrong entity setup, right? Because you're trying to identify one-time events, which is what we went over a second ago, the purchases, the sale of assets, spikes in income, unusual maintenance or repairs. I'm just giving examples of one-time situations that you might not repeat for the rest of the year. So coming into the next tax year, you're assuming, hey, this is what I'm going to see again. The movie was great. Can't wait for part 2. Everybody knows sequels are the worst, right? But if you had a successful year and then going into the next one, you're assuming without looking back, then you're missing it. Were the expenses or what was happening on your tax return, was it a structural issue? And that's what we're jumping into. Was it entity setup? When am I doing the right thing? Sole proprietor, LLC, S Corp, C Corp. Am I paying myself or others correctly? Did I plan for my retirement in it? Am I tracking my expenses correctly? God knows that is a big hiccup for most business owners. They're commingling or they're just using horrible formats to figure things out. And then they're scrambling at January and February to try to squish as much information in on a piece of paper to get things right. So if you're not paying attention to all these things, again, on the tax return and having a plan and a structure moving forward, it's going to cost you. It always will. The other part is this is, as again, after you file your taxes, where the strategy actually starts. That's where planning is now moving into. Now you could actually build a full plan because you have a baseline. You have a place to start. You have the gaps. You have the opportunities that were missed or taken advantage of because you're seeing it black and white on paper. You can adjust anything you need to. You could make changes in whatever it is, payroll. You could plan ahead because now you're talking to whoever and you know that you're going to have, again, we talk about this all the time, office parties or purchases that you have to make or hiring that you have to do. Whatever it is, you're seeing what's going on based on the last year's performance, because that's a tax return, and then you're able to structure things, accordingly. So this is where you stop reacting, because that's what you're doing when you're just scrambling to turn in your tax return in January, February, and March. You're just reacting to things. This is the part where you start to take control of the outcome, which is, everybody likes that, right? When you're watching the movie and you say, oh man, the protagonist, right, we're using the big words, is sitting there getting their butt kicked, and we hear the music come on, and we know that here's the turnaround where they make the block, they block the punch, or they do whatever, or they're doing the training montage, right? My son loves that in cartoons, training montage, and you know that this is the part where the outcome starts to shift because they are going to make a change, and it's going to become the movie, the happiness, the smiling that you want to see because you want to see them succeed. Unfortunately, I'm the guy that likes the bad guy winning. I'm being honest with you guys, but I understand human nature and our desire to see people win, but that's what our goal is when it comes to tax planning, and you knowing that this is the opportunity for you to transition into a winning season. So again, we're going over tax planning and why the best time to tax plan starts after you file. And it's because now you've been hit, you've blocked the shot, and you are ready to come up triumphant, right? This is huge. The last point that we want to make for you is this. Waiting is always going to cost you money. No one likes to spend their own money. It's annoying. Who wants to keep writing checks? But if you wait until the next tax season, we said it earlier, it's too late. It is too late. You've missed an entire year of opportunity to tax plan. Most strategies are gone. You're stuck reacting again because that's what you did the time before. You're saying, oh, here's what it is, and let me panic, put it together. By the time you're filing your taxes, most of your options are already off the table. I know we've said that before, and we'll probably continue to say it. You can't plan late. It just does not work. So again, this is why we look at the tax returns. It's a starting point. It is a starting point. It is a starting point. The emphasis is strong in that. It's not the end. It might be when we turn in what happens, but is it opportunity for you to start and look over everything that's going on in your business and make and address the opportunities for change, or keeping things the way they are because they work. Make sure you understand that. So now the question becomes, what do you actually do with the information? You spent the time, you've looked over the tax return, you've addressed positive and negatives, but what happens? Because again, planning isn't one decision. It's a series of decisions throughout the year. In the next episode, we're going to break down tax planning calendars. I remember talking to someone about that probably when we first got into it, and I said, yeah, we're going to do a tax planning calendar. We're going to talk to you, and the stare. Right? Like, what is this person talking about? But we're going to help you to understand what a tax planning calendar is, what to do, when to do it, and how to stay ahead all year long. As always, we're giving those closing remarks, right? The simplicity of this entire podcast is this. If you're only thinking about taxes once a year, you're only giving yourself one chance to make it right. One chance to get this thing right. Who wants that, right? We don't want one shot. We want the opportunity, or as many opportunities as possible, to put ourselves and our businesses in a winning position. So that's all we have for this episode of TQ Talks. Thank you so much for joining us. Like I said before, we're going to go over tax planning calendars for the next one, and we'll break it down for you. It's not as hard as it seems. It's pretty simplistic. Thanks for joining us. Find us wherever you get your podcasts. My son, again, will do the outro. You know how to remember all those things. Any questions you have, always reach out. 800-413-1456. You guys have a great evening. Bye-bye.
Thank you for listening to TQ Talks. If you enjoyed the show, please rate and recommend on iTunes, SoundCloud, or wherever you get your podcasts. You can also get more information at tqfinancials.com.